But today we have a special training for you guys, and I'm excited about this one. I've known Charlene for a while now with EXP. She's out of West Virginia, but we met probably 3 or 4 years ago, Charlene. So I love what she's doing in the world of VA loans, and she's very much an expert in helping veterans. Her husband has been is a veteran, long-term veteran. So that's just a passion, and it's been their family. And so she's been licensed for 10 years. She's sold over 400 homes. She's an icon agent, and she's in the top 1% with Veterans United, out of over 8,000 agents. And so you guys are in for a treat to hear, especially if you're in areas where you've got bases and you've got a network of veterans. And quite honestly, even not like in Nashville, we don't have a base. We do in Clarksville, about 45 minutes, an hour away. But I've done several, had several veterans, and there's a really great information that she's going to share that is helpful when we're serving our veterans. So, Charlene, thanks for being here. She's got a little bit more of an intro, so I'm going to not steal her thunder with that. And I'm going to just turn it over to you, and we appreciate you being here.
Thank you for the honor. Hi, everybody. I see a lot of new names that I don't recognize, so that's pretty awesome. And Brad, I'm going to share something. And remember my book? It's on steroids now. Let me tell you, I'm missing one item from it, but I didn't get it in time. I'm Charlene Byrd. And she said, I've been with EXP for 5 years. I'm a two-time icon. I've sold over 400 homes. My husband did just shy of 23 active duty and just shy, when I say just shy, I mean just shy of 29 with his National Guard. So he's National Guard, then Army, then Air Force. We retired out of the Air Force in 2000 and he did 2017. I came here in 2016 and got my license immediately. And I spent 10 years as a civilian in the military. And when I said I did 10 years as a civilian during 9/11, I was the one who went to work. My husband stayed home. So I sat in a headquarters in Japan and looked at the intel coming through saying, I'm probably not going to make it home. As the intel did not say that it was going to be pretty good. But we had no idea, but I still got up and I went with a smile on my face, and it's an honor to be able to serve my country. I was wondering what to do afterwards, and my goal was, hey, why don't I give back to my state by helping veterans through real estate? So we came up with, hey, let's do this, and I did. Not only when I got here 10 years ago, nobody wanted my contracts. Nobody wanted to do a VA loan, and I had an uphill battle. I did not have a supportive broker at all, and I did it all on my own. So I am very grateful to be where I am, and I'm very lucky to still be a realtor with those statistics. So over on your chat group, you're going to see a VA loan guide for agents. And that is something that you can use as agents. And we're going to go over that ourselves today with some slides. But that there, you guys can print off. It's 40 some pages, so watch your ink. But it's going to give you all that you really need to know as an agent for VA loans and working with your veterans. I'm going to share my screen, and can everyone see this okay?
Yep.
Let's see if it changes itself. There it goes. All right. So one of my mottos is be the hero of the hero. And the veterans are our heroes in the military as well. This includes active duty military. They're our heroes. They're serving our country. A lot of them come back. A lot of them have been through a lot, especially in our age that is purchasing houses, because a lot of them went through 9/11. Quite a large portion of our vets have. They're not the same afterwards. If anybody went to Jane Ashley's retreat, then you would seen my husband up on stage kind of fumbling for words. That's normal for him. Unfortunately, he is 100% disabled. And even though he's a licensed agent, he has a very difficult time with remembering things, remembering clients, and just just life in general. But the fact that he's licensed can open up a door. It gives him a sense of purpose. So I'm very honored to have him with me. My motto is, if I can teach 100 agents how to help 10 veterans, then I just changed 1,000 lives for veterans without even selling a house myself. I've sold 400 houses in 10 years, but I can't I can't help everybody. But if I could teach 100 agents to help just 10 vets, I just changed 1,000 lives. That's powerful. That's what it's all about. It's about helping others. And I'm going to give you some tools today where you can actually go out and help 10 vets yourself. I do have 2 licenses. Not only am I a realtor, but I'm also a loan officer, and I'm a certified veterans loan specialist through National Association of Mortgage Brokers. So I hold that certification. As hard as our real estate exam was, the MLO test and the veterans test both were 10 times harder. I came out crying and shaking and so thrilled that I passed. I was not confident at all that I was going to pass that test. All right, so we're going to start off on why VA loans. VA loans are the most apt to get to closing and the least apt to foreclose. And when I say they're the most apt to get to closing, I mean they're truly the most apt to get to closing. It's a very, very big, huge gap between VA and any of the other loans. It would blow your mind. It's 90-some% closure ratio on VA loans. And the reason being is they're so versatile. A lot of the agents think, oh, but they're so difficult. They're not so difficult. They're actually the easiest. On the loan side, with the loan officers, if you have a great loan officer, it's smooth as can be. It's only when you have those loan officers that don't do VA loans does it become more of a challenge. Some of the reasons why they're a good offer for your sellers are there's no down payment. The government guarantees that, where instead of needing the down payment and stuff, that government's backing that loan. And so that's what the certificate of eligibility is. So everyone's like, what is that COE that they talk about and stuff? It's called certificate of eligibility. That means the government is going to back their loan. Tidewater, so with that, the lenders are guaranteed that this house is going to be okay, because if it forecloses, then that portion of the guarantee, they've got it. They don't have to worry about that portion. So it's easy for them to not lose money on it. So these loan companies really want this as far as a loan goes. We're going to go over Tidewater and Reconsideration of Value. They're actually 2 separate items, but they're going to give your clients a very, very strong reason to purchase this home. There's no PMI, so your buyer doesn't have to pay mortgage insurance at all. No debt to income. We're going to go over this later, but it goes according to residual income, not, there's no debt ratio. So under FHA, a lot of times we have to go FHA because they're higher debt ratio versus conventional. Well, with VA, you actually can go up higher. I had an 88% debt ratio once, and they can have more than one loan. Again, we'll go over all of that later. One of the coolest things this year, and forgive me, but AI put this in order. One of the biggest things this year is the changes in NPR. VA loans just got easier. And why? How many people have had like an old shed, old barn or something on the property? They're like, I'm so sorry, but I can't let the loan go government because that shed needs torn down. That building needs painted. We've got a barn out there and that barn's got a piece of siding coming off. Who's got those issues? Everyone's run into those issues. They no longer have to meet minimum property requirements. So you have peeling paint. That's fine. It's a 100-year-old building, a barn on that property. It's fine as long as the roofs are not attached. I was so crazy. It was so crazy. In May, after this change happened, I'm like, hey, that garage it doesn't have to be painted, I don't think. And here was the problem. Although it was considered detached garage, the roof between the garage and the house had a attached area where it was like a little walkway, breezeway in through there. So therefore, the lender said, no, it's attached. They're attached at the roof. So they made us paint it. It was a day of work. It wasn't a big deal. But no, if it was fully detached, not attached at the roof, we wouldn't have had to paint that building. And that would have been really nice because a lot of times the agents are saying, hey, it's got peeling paint. It's got peeling paint. Maybe you got new siding on the house, but the other detached structures do not. I had no idea that after 1978 was a requirement that if it had peeling paint, it still had to be painted. And I ran into it in April. I was like, why in the world does the garage floor need to be painted? This person is insane. Then the new NPRs came out. I was like, well, now it makes sense. We had to paint a garage floor. So it's only pre-1978 for lead-based paint. It makes no sense afterwards. Again, back to the 1978, only the main dwelling, not the detached structures. On a new build, we don't have new builds in my area, but other states do. Radon no longer is an issue. The builder certification requirement for new construction, that's gone. So I had a person who was declaring a house new build, and they were refusing to actually do the radon certification. So that's kind of cool. And then now those fireplaces, non-vented heater sensors, or the wall heaters, they're no longer a requirement. You don't have to do the oxygen depletion sensors. Has anyone ever dealt with that? The oxygen depletion sensors. So you don't have to worry about that anymore. So the fireplaces, the wall heaters are no longer an issue. What they're trying to do is they're trying to make VA the most easiest loan out there. And it's actually, in general, I can say it's easier than conventional at this point. It's almost, or at least it's close to being easier than conventional. It's much more apt to get to the closing table. And the reason being they're so flexible, and they want the government wants the veterans in houses. Tidewater. All right, I'm saving them for Tidewater. So Tidewater is really amazing. When you're looking at your seller and having two separate contracts, let's say they're $350,000 each, just for a round number, and you've got a VA loan and a conventional loan, and you say, well, you know what, conventional is easier. Not necessarily, it isn't easier. And the reason is because of Tidewater. I had an appraiser once tell me, hey, this is why I love VA. I had a house and I was trying to do a conventional, and he was not capable of getting it in. He could not pull the comps. He says, the comps, I'm restricted to a certain distance when it comes to Fannie Mae, Freddie Mac loans. He says, I can only go back so far. I can only go out so far. But under VA guidelines, you can actually go out further, and you can go back further as well. So even though 12 months is typical for VA, occasionally it's even back further than that. No, Jack, go lay down. Sorry, my dog's here at my legs. And he said, whenever I got the same contract coincidentally under VA, he's like, I knew the value was there in the house, but I couldn't pull the comps. Rural properties are like that. He says, under VA guidelines, I went out a little bit further. I was able to pull the comps I needed to, and thus the house came in at value. So the seller lost the conventional loan contract because they could not get the price up due to the comps. But under VA guidelines, they were capable. Now, let's say the house doesn't come in, and let's say they call a Tidewater. A Tidewater is actually a 48-hour timeout window. It just takes, okay, let's get 48 hours where everybody takes a breather, and then we're going to allow the seller to come in with their own comps, because the seller wants to get the most for the property, right? And you want to work as the listing agent to get the seller the most bang for their buck for that house. Well, it gives a 48-hour timeout window for them to be able to look at the comps themselves and say, these are the comps that we thought the house price came in at. And these are what we're looking at. Maybe you have an off-market property. Maybe there's one that was in a different MLS system that the appraiser was not picking up. In our area, I think our state has 36 MLS systems. And sometimes I get an appraiser that calls me and says, hey, listen, I need a comp in your area, but I can't find one. Can you help me out? And then I help them get the comps that they need. So sometimes they're not seeing the comps. That's what Tidewater is all about. It's giving that 48-hour breather. The buyer, the seller, because that buyer wants that house too. The buyer, the seller, the listing agent, buyer agent, they all come together and they find the comps to make this work. Okay, so they determined that, so the appraiser says, hey, the house is not going to come in at contract price. The house was $350. I can only come in at $325. The appraiser notifies the lender, hey, listen, I need a 48-hour timeout window. I'm calling a Tidewater. The lender then tells the buyer's agent, hey, you get 48 hours to submit the supporting comps. The comps come in within that 48 hours. The appraiser then takes the new data and they determine whether or not it's going to come in. And then they issue the final notice of value. Okay. What if they're coming in at 345 and the seller still says, listen, I want 350 and that's all there is to it? I have great news for you. Reconsideration of value. You then can take it to the next tier. And there's like 70%, I think, 70% of the time, actually, the VA will actually do a reconsideration of value and actually accept it. And maybe not 100%, but they'll come close to it and they'll take a look and do something. So if Tidewater still doesn't come in, we came in at 345, the seller still says, nope, 350 or nothing, then you can go up to the VA. And under the reconsideration of value, you have a formal package, detailed comp package that you want to take up to them and why you feel that the appraiser is wrong. It can take a few days to do it. I recently had this one come up as a lender. One of my coworkers said, hey, listen, we got the appraisal in. The appraisal was fine, but the lender of all people said they didn't agree with the appraiser and they were not issuing the NOV. They kinked the whole deal. Well, we figured out what was going on. It was a house that was in a rural area and they just weren't comfortable with it. I says, I got the perfect lender. He's going to take it over. He's going to take care of it. Within 3 weeks, we were closed. Now, that lender had to go all the way up and do a reconsideration of value. He had to make phone calls up at the VA and stuff. Luckily, he knew people in high places and he was able to get the reconsideration of value and they were able to actually get closed. So he had to do a few things on it because there were some discrepancies, in through there with the appraisal and stuff, but he was able to do that. That's why VA is really good for your sellers. Again, conventional versus VA, that seller has more leadway of getting what they want through VA system. Does this make sense to anybody, or does anybody have any questions? I like to do interactive when possible.
How long does that process for the reconsideration typically take?
The system was pulling a couple days to a couple weeks. Okay. It depends on situation. Could be just a couple days.
Okay. Cool.
But if the deal, if that's your only option, then sometimes it's worth the wait.
Sure. Yeah.
In your experience, what has been like the biggest spread between what the appraiser came in or the Tidewater came in versus the ROV? And stuff? Is it usually like around 5,000, 10,000? I mean, what is like kind of a general thing where you can get it approved?
You don't have to worry about it too much. I do get Tidewaters once or twice a year. Sometimes I just agree with it. And then sometimes, we find a different comp. My area, we're in the lower area, so the spread's not going to be as much. In other areas, it's pretty significant, and it can be. It all depends on the comps that you find. Maybe you have those off-market comps for sale by owners, that they were not able to pull up. Here is another thing. Reasonable value. This is the reason why we don't get too many Tidewaters. Reasonable value versus strict market value. So VA versus conventional. Really pay attention to this. Under VA, they can use older comps. They can expand the geographic search value. rural is the biggest thing. This is really big in rural markets. When you don't have the comps, under conventional, you're set on those guidelines. There is no flexibility. So you got strict market value on the house. So there is no wiggle room. So when it comes to getting a VA loan approved, they're more apt to be able to come to that contract price because they're able to go further, they're able to go back further, they're able to what is reasonable. So I don't have too many Tidewaters. When there is a Tidewater, a lot of times I'm upfront saying, I think this is going to be a Tidewater. And a lot of times I'm correct. One time recently, I was not. It came in. I don't know where they got the comps from. I don't know how they comped it. No other house sold for that amount, but hey, he pulled it in somehow. And it was a standard house that we have a bunch of, but typically I don't have too many of them. When there is one that is called, usually there is justification on it. It just was overpriced. So, but that's what's nice is there is a little bit more wiggle room under VA. Does this make a little bit of sense? You would come in closer to the contract price under VA than you would a FHA conventional USDA. They use conventional as the guide because most people think, oh, well, conventional is the best loan for my client. It sometimes is and it sometimes isn't. There are times when I say, well, that house really is a conventional house, but it's more so because that roof is leaking and that's it's got peeling paint all over and things like that, safety issues that VA is not going to do because they want to make sure that it's safe.
Charlene?
Yes.
Have you seen anything with the Tidewater in regards to, in the last several years, we've had a lot of seller concessions and things like that. How have they handled, increase in price for seller concessions?
I have no issue. I do it on every one of my clients. So 90 some percent of my clients have full concessions and through Veterans United. So you're talking about quite a bit.
But so there hasn't been any issue with the Tidewater as far as just lower, like if it comes back Tidewater, is that something that you would typically try to negotiate less?
So one thing I do is I make sure to give enough concessions that if I had to decrease my concessions a little bit, we have a little bit of wiggle room. I'd rather go higher than lower, especially if I'm concerned about a Tidewater. If I'm concerned about it, I want an extra wiggle room there so that we can maybe, hey, we have to go down 2,000. So the seller is also coming down 2,000. And then maybe we each cut our commission just a little bit as well. And we all meet in the middle, if that makes sense. So I'm kind of preemptively thinking if I have a concern for Tidewater, if that makes sense.
Yes.
So I try to make sure to build in an extra 1,000 or 2 into there. All right. That way the seller feels like, oh, well, the buyer came down and I'm coming down too. And the agents are all meeting us in the middle. Now, under Veterans United, as a lender, if you cut your commission, let's say I cut my commission $3,000, then they have the ability to go into their leadership and price match you. So you came in down 3,000, we'll kick in $3,000. They have to get approval for it, but they'll kick in $3,000, thus just doubled it. If that makes sense. So in that case, I started thinking, wow, I need to stop cutting my commission so much because I need that wiggle room. If it's Tidewatering, I won't cut the commission from 3% if I am concerned on a Tidewater. And the reason being is because at that point, I know if I come down, they'll match me. So again, strategy of how to get your client to the closing table. VA's got more wiggle room than anyone. VA versus conventional and USDA. Down payment, there is none. There is no PMI either. So you don't have to worry about it. You've got your entitlement, so you don't have to worry about a loan limit. It's the only one with the Tidewater. Now, with that said, the Tidewater, it may be coming out in legislation and stuff that the other loans will start doing Tidewater. I'm like, oh man, that's taken away from my VA because right now my argument is to other agents, I'm the best loan possible. But in reality, if that happens, then I'm kind of concerned. Now, my lender boss says, no, it's going to tell other agents that it's typical because people are scared of Tidewater, but there's no reason to be scared of it. It's something that is customary. It's something that's a benefit, not something that needs to be scared. You need to be scared of. One thing that's really neat that I'm learning more of as a lender is what's called seller credits. You're capped at 4%, where FHA, it's a 6%. But under VA loans, you can do seller credits and you can actually pay off their debt. So their credit cards, you can pay off that credit card in a VA loan. Isn't that awesome? So you get somebody that, maybe they're struggling and they said, well, I want that house, but I can't afford it. I can make you afford it. Because now I'm taking that 27% interest rate credit card that they're over their head on, I'm adding it into the loan and then and figured in the concessions. But you have to say seller credits instead of just closing cost. You're up to 4% in closing costs, but you can go up to unlimited when it comes to seller credits. That is a big benefit. Does that make sense? And does that make everyone excited? Maybe.
Is that only, I mean, as long as that appraisal and everything else comes in on that house, then, right? For that value?
Right.
Okay. Awesome.
But it can help make that deal work. Again, this is one reason why VA can get to that closing table much easier than any other loan. It's got so much flexibility. Is it on the agent's part? No, it's on the lending side. That lender's got to be there. If you have a good VA lender, they're going to be there to hold your hand through that process and tell you what to write up on that contract. This is how to get it done. The default rate, look at that, about half of the FHA.
You're not showing your screen, just so you know.
I'm not,
I
or my
see it.
slides are not.
I see it.
Yeah, I see it.
Change your view then. There's different view types. There you go. All right. About the default rate is super low on VA loans. It is the lowest. And the reason being, and I think it's later on in the slides here, but the reason being is there are things that the veteran can do to keep it from foreclosing. All right. What VA lenders want agents to know? No loan limit. So you can go to 1.2 million without needing to put a down payment down. I believe there's different ones, different states. But you get full entitlement. You can go up there. They changed that where it's kind of wonky and everything. You got county limits, and different things, but just know that they can be $1 million and still have zero down. Okay. Another thing is you could do 2 loans at once. Somebody at Gatlinburg said he didn't know that. He thought someone would have had to pay off their other VA loan to get a new one. If they have entitlement left, then that's fine. Just ask the lender and see, hey, do they have enough entitlement? The certificate of eligibility that they pull will tell them how much entitlement they have. So when I purchased my home here, I was above limits and I had to pay, I think 20% of the remaining amount. So it was a small amount, but I had to put a small down payment down because my house it's a mansion. Okay. I call it a mini mansion though. It's 8,000 square foot. 8,000 square foot is actually constitutes a mansion, but I call it the mini mansion. I have a lot of kids. Don't judge me. And I didn't pay much for it. It was $478,000. Departing residents offset. So you can actually go and move from one to another one. You can actually have the payment omitted from your DTI, from your debt to income ratio. You don't have to have a lease. You just have to have an amount of rent. So they can emit it up to that for your down payment again, your DTI again. And again, this is making a VA loan more apt to get to the closing table because, again, it's on the lender side that there's so much flexibility for your buyer. You don't have to worry about what ifs as much. Seller concessions, again, you're unlimited. One is concessions only, but you got standard closing costs, concessions and stuff. where you're 6% only on FHA. This allows you to be a lot more, buy off the car loans and judgments and things like that. So you can actually pay off their judgments and everything.
So, quick question there. Then, as the agent, do you need to write when you're putting in the contract or the offer that you want them to pay closing? Do you have to also say, and any or all debts and judgments and blah, blah, blah? Like, do you have to
The seller
specify that?
credits. It'd be
So you don't
seller
have to
credits.
specify what it's for. It's just like here in Tennessee, we'll put like it's toward for the closing costs, for the title insurance, for we'll specify what exactly it's.
So here's a catch-all that I could say to do. Seller to pay $10,000 towards buyer's closing costs, lender fees, broker expenses, prepaid item fees, points, buy downs, and or seller credits. So I have to add on
So
seller
you say
credits now.
seller credits to get to basically be all encompassing for the car loan credit cards, all that stuff. Okay.
The seller
cool.
credits, the seller credits is what allows them to pay off debts.
Okay, cool.
So I've been corrected on that and said, you're writing your contracts wrong by a lender, my VA lender recently. And I says, what are you talking about? I'm encompassing everything. That's what the lawyer told me to do. And the reason being is one time I had somebody from Colorado, of all places, God bless you, Caleb. I hear Colorado's a living nightmare. A Colorado attorney basically said that they were not going to pay for the buyer's title policy or something. They had something in there and they were refusing to pay, and it was costing us the closing. So he afterwards said, I've never in 20 some years ever dealt with this. We're going to change this. And he told us exactly what to write. So a lot of agents here are doing that.
Yeah, it's interesting because we have all of that in our state contracts, which is nice because we just put it as seller concessions, but it literally lists everything that can be covered, which is all the stuff that you just listed in our state contracts.
That's good. I know you're more detailed and you're very different because everything says except Colorado.
Yep.
And a lot of EXP docs and everything. Okay, so the veteran sees a dated house. This is a good example of what VA can do. He sees a dated house. He purchases the improvements on a credit card. I don't recommend without the lender's approval. Or possibly he has a credit card that's, let's say he has a $4,000 credit card maxed out. And you put in there seller credits for $4,000, so it pays it off. Well, those improvements are $4,000, so he can then afterwards charge that. I would say that would be a better scenario. I wouldn't tell anybody to purchase anything prior to closing. Seller then pays off the credit card at closing, and then they get the home that they want, and then they legally get that money for fixing up that house. So again, these would be carpet, paint, things like that he couldn't find the home of his dreams that was already, the way he wanted it. He finds a home, he loves it, but he just hates that carpet because it was the old red shag carpet or green shag carpet from the 1970s. He doesn't have the money to change out the carpet. This is a possibility of a way to get around it. And again, what we're talking about is VA has so much flexibility, but work with a VA lender that knows their business and knows how to get this done, because it is going to get you closed a lot more sales and a lot smoother sales. Residual income versus and manual underwriting. This is really, really important. Yes?
I have a question, Charlene. Thank you. This is a really good training, by the way. On the scenario you just ran there for us, what it said for us to read and what you said were conflicting for me.
So they're saying pre-purchase it.
Okay,
so
right.
I had a veteran recently that was purchasing a home from his landlord. He wanted to do improvements. Well, the lender found that he had a credit card that he could pay off and then purchase the improvements afterwards. This is saying pre-purchase the improvements on the credit card and then pay it off. That is possible. I'd only do it with the lender's consent.
Because who is the party, the seller doing this or the buyer?
The buyer. Because you're asking the seller for those seller credits that's going to pay off that credit card. Okay. So let's say they had that $4, $5, $6, $10,000 credit card. You wrote it into the contract already to do that. And the lender gave you permission that they purchase the thing. So if they purchase it, because money cannot exchange hands at the table, right?
Mhm.
You can't do cash to cash, person to person. So this is one loophole of doing it. VA has this loophole where the other loans do not.
And would you consider this risky because the title is not in that buyer's name yet, but at least
That's why I said I would look more towards something that's already charged. Let's say they have a credit card already charged out, you pay it off, and then afterwards they go and buy stuff.
okay.
If
But
that
you
makes
just put
sense.
it out, it's good to know it is an option, but probably not the best option.
I wouldn't do it this way myself.
Yeah.
I would do it the opposite way.
Okay,
But
thank
if it's
you.
the only way to get it done, sometimes the risk is worth taking.
Right.
Okay. I
Mhm.
don't advise this though. I
Okay.
wouldn't advise this with anybody. I would advise finding a credit card or debt that they had, or, well, basically the credit card, because that would be the line of credit.
Right.
Okay. And that way they can go freely buy everything as they wish, from whomever they wish. You don't have to go and have all those invoices and stuff to go and pull and send over to the title company and everything. All right. It's a very good, interesting option. I never really was thinking about this myself. So this is something that's more come to light for me in the recent years versus prior years. I wouldn't have thought about it.
Can I ask a question?
Sure.
Okay, going back to that screen, and maybe I'm trying to wrap my head around it. What happens if it doesn't close?
That's why I said it's risky if
Uh-huh.
they do it ahead of time.
Uh-huh.
I would hope that they would have a credit card, that's already maxed out. You
Yeah.
pay that off at closing, then they go and purchase everything. So the
Oh.
title company, escrow company, lawyer, whichever,
Mhm.
pays that off immediately at the closing. So they
All
take the
right.
statement in, they'll pay off that statement.
Okay. Thank
Okay.
you.
Then they go purchase it. The way this is written makes me nervous because you're
Yeah.
right. The title is not in their name yet and something could happen. I think this needs to be changed. Okay. I don't like the way they did it. I didn't do this. AI did it. My new friend Claude did it.
Claude.
Well, maybe,
Claude has
yeah,
been a
just
great
maybe not to
person.
say pre-purchased it, but I like your idea of like, hey, pay off another credit card and then use that credit card, that open line to buy stuff after closing.
Okay.
Okay, residual manual underwriting. So, under VA guidelines, you don't have to go by debt ratio. A lot of lenders have it what's called an overlay, and they have a debt ratio for VA. But in reality, VA doesn't have a debt ratio. If a veteran with 50% DTI can still get approved with residual income. Now, different people in different areas, but one person, all they need is $441 left over. Now, let's say they're doing the Uber job on the side, or they're doing the grocery delivery or something on the side. Can the lender count that income if they've recently got the job? No. Do they have income? Yeah, but they can't count it. So what happens to their debt ratio? It's skyrocketing. It's high, right? I had a guy that had a house in Hawaii. He did not want to sell that house in Hawaii until he had a house to come home to. He was 88% debt ratio. Guess what? We got him done. And the reason being, he had enough residual income left over.
Mm-hmm.
Okay. So what is residual income? It's income left over after your bills on your credit report get paid. So when the car's paid off, the house is paid each month and stuff, how much money do they have left over for food and gas and utilities and everything like that? Believe it or not, all they need is $441. So in some cases, it makes pure sense. It gives, once again, it gives the veteran more flexibility to get to that closing table. And imagine you're now taking away, let's say you are going under, put in 10 offers, and all of them have that home sale contingency. And you're not competing with everyone else. I remember a time when we were offering pizza for a year and child education and everything like that. Everybody remember? So what if that home sale contingency, a lot of times you're not competitive. If you're competing with others, you're not competitive. So what if you're able to remove that and say, listen, I know you really want to do contingent upon home sale, but we're not finding our home because of it. You've lost out on 5 homes already. Why don't you remove that? Go according to residual income under VA because you're a veteran, and that's what you can do under a VA loan, and remove that home sale contingency. All of a sudden, you now have a new ball game. Now you're submitting that offer without that home sale contingency. How much more purchasing power does that veteran have now? It has a lot. Does that make sense of why VA loans are pretty amazing? And that is powerful. When you can go in and say, listen, I'm placing an offer, but I'm not doing home sale contingency, you have so much more purchasing power than with that home sale contingency, because those sellers are scared. Homes are sitting on the market. It's not what it was, and if they're scared that your home's not going to sell and they don't want to take their home off the market and everything, then let's remove it. What if we have that 72-hour kick-out clause? We're under the home sale contingency. Somebody else places an offer that's better than ours, and they want to accept that one, and they want to kick us out. Then what? Then we have that 72 hours. Let's rewrite the loan. Let's go through and let's do it under, manual underwrite, and let's, and go according to residual income. Let's remove that home sale contingency. Let's take it out of the ball game. Let's continue and let's move on with the sale.
Can I ask another question?
Sure.
Okay. I've had deals where one lender couldn't get it done and I would go to another lender and they would, because they have access to different tools. So everything that you're showing us, is this across the board with any lender? It's not just you?
Every lender can, but a lot of lenders want to put their own guidelines on. Veterans United is one. They don't like to do residual income. They mandate somebody to go and sell their house. So I have one right now. Possibly I'm going to have to move him to another lender. He does not want to sell his house. So I'm waiting to hear back today whether or not I can get him pre-approved through the other lender. Mm-hmm. He just doesn't want to do it. I love Veterans United, but I'm sorry. Sometimes they have overlays. They have a 620 credit score. VA does not have a low bottom credit score. So you don't have a bottom line. You can have a 500 credit score and still go and get a house under VA. Does that, the guidelines are there, but there's overlays from banks. And again, the one that we just closed and we rescued, there was no issue with that. It was the lender that had the issue. And that's why you want to work with a VA lender that eats, sleeps, and breathes VA, because they know all these guidelines. This is not something they teach in class. They don't teach this in lending school either. They don't teach any of this. It's law that they teach in lending school. This is only taught by somebody who actually sits there and learns it. And you only learn it if you're doing a lot of the VA loans. You're not learning it doing 3 a year, because all they're going to do is do the easy ones. They're not going to do the hard ones. Does that make sense to everyone?
Yes, thank you.
All right.
Charlene, while we're talking about that, what states do you do loans in?
I think he does almost all states. So I'm underneath of Mike Farrell, Total Choice Mortgage. I think he said 50 states. He does not do Puerto Rico. I learned that. But I do have a guy in Florida that does. So he's working with somebody down in Puerto Rico right now for me.
Okay. So I'm in Florida. I'd be able to pass that on to you and you can help? Oh,
sure can.
That's good news.
I have to do a paper, because a disclosure paper, and I can't be primary. Mike is primary, but I help facilitate everything, and I'm your bridge and communicator.
All right, good.
So I wish I could do more. Unfortunately, I have to guard. I'm a realtor first. If I don't become a realtor first, I can't help you guys as much, if that makes sense, because I can't be here doing all of this. I do it more so through the lending.
I'm going to put your cell number in the chat. Is that okay?
Sure, absolutely.
Okay.
No credit score. So 620, Veterans United 620 credit score. That's not a VA rule. My husband had an 800 FICO score. We were turned down by 5 lenders. One of them being Navy Federal. Who would have ever thought Navy Federal would turn down an 800 FICO score? There's 3 reasons they were giving. Number 1, wife and children are moving back home. I'm staying on active duty. So VA guidelines said that's not an issue. Number 2, the house has more than 10 acres. Navy Federal said, we stop at 10. Why? There's no limit. Number 3, it had an accessory unit, which is a guest house. I have a wonderful guest house. I brought home 7 kids, 5 adopted, then my twins, and a mother-in-law. My 5 adopted, I knew were severe ADHD. They're all sibling group. All of them are severe ADHD. All of them were high risk for being young adults. They are now young adults. My daughter's in the guest house with a baby. I now have access to that baby where I can watch over the baby because she isn't the most stable person. So it was very important for me to get this property where it had a lot of space. It had movement for the kids with ADHD. It allowed them to be able to live life. 5 people turned us down with the 800 FICO score. That's pretty sad. Veterans United was the first person that said yes. They knew the rules, and we met all their guidelines. So no credit score. What you do have to have under VA guidelines is 12-month clean credit. Oops. That's it. 12 months clean credit. So maybe they can't buy the house today. Maybe it's 6 months down the road. Maybe it's 4 months. Maybe they can buy now at this point because they had that injury at the job, broke their leg, or car accident. Let's say car accident. They had a car accident, totally broke their leg. Couldn't go be a garbage man down the road collecting garbage because he couldn't walk. He lost his job, right? Because that car accident, was it there with the garbage? No. Was it their own job? No. So he had no income for a few months. What happened then? He got behind on his bills. What happened to his credit? His credit tanked. Okay. He couldn't make his rent. He had and everything. Well, it's been 12 months now. He's back on the job. He's been good. He's got his life back in order, but his credit score still tanked, right? Because he couldn't pay those bills those few months. Well, he's a 500 and some credit score. You can still do it. All you need is 12 months clean credit. Okay. Now, can you have collections? That's going to be a different story. But 12 months clean credit you can do. Okay. That's kind of cool, isn't it? Now, we've heard that conventional suddenly has no credit score, right? Fannie Mae, Freddie Mac, they changed their guidelines this year. Why is it? They saw how successful it was with VA, and they're like, we want to be more like VA. Watch, they're going to be like VA in the future. So my lender boss, he's on National Association Mortgage Broker. He's, I guess, the president of it at the moment. So he goes to DC. He does all the legislation and stuff. Let me tell you, conventional will soon be like VA. I think they're working more and more towards the VA guidelines, but they removed that last year. But the credit score doesn't have to be. The 12-month clean credit is what it needs to be. High debt to income. I told you about my 88%. Yes, it's a manual underwrite. Yes, it's a little bit more involved on the buyer as well as the lender. But again, if you have that good lender, is it a problem? No. All you need is the good lender that knows what he's doing. Okay. Recent credit events. Bankruptcy. How long is it for FHA and stuff for the bankruptcy? It's quite a bit of time. It's like 2 years for VA loans. So you can have a pretty recent bankruptcy and still get a house. I have somebody that had a foreclosure. He's waiting his 2 years and buying a house again. My only foreclosure I've ever had. He's waiting his 2 years. He can't wait. He's excited. He's counting down the days till he can have it. Collections, late payments, you need 12 months clean history. Okay, well, 12 months for bankruptcy then maybe. I thought it was 24 months on that one. Okay, so 12 months clean history is your key. Thin credit, active duty, cash-based allotment, alternative trade lines you can do. So rent, utilities, cell phone, things like that. Insurance, as long as they're doing that, that's all that matters. Streamline refinancing. So under VA guidelines, it's different than any other refinance. When you do a refinance for conventional FHA, USDA, all of that, you're actually going through the whole process all over again, correct? Under VA guidelines, you don't have an appraisal. So let's say, Kathy, in your area, hasn't the housing market went down versus up? Did I hear that right before? Do I remember right?
Run that by me again. I'm sorry, my dog's barking.
Your housing market, has the prices went down versus up in your area?
I'd say they're flat here.
Okay. If you're in a declining market and your client is underwater, and let's say they owe 500,000 on their home and it's worth now 425. Can they do a refinance usually? No. Under VA guidelines? Yes. Because there is no appraisal, you don't have to worry about being underwater anymore. So it makes it easier. This is why you want them to maintain that, even though they can go FHA, they can go conventional, they have the ability to go any which way. It's smart to go VA because you don't have to worry about that. Also, you don't have to worry about income. Let's say they lost their job afterwards. They want to refinance because their debt is not going too good, and that's their solution. Well, you don't have to verify their income anymore. And you don't have to pull their certificate of eligibility. Now, with that said, you pull the credit for the house loan, and there is other qualifying factors. So if you have a very high debt ratio, your interest rate is going to be higher than somebody who has a low debt ratio. So they still pull some guidelines in there, and it can affect your rate some. So you have to be cautious on that. But if they were one of those that had that 70% rate, you don't have to worry about it. So let's say 2 years ago, somebody closed at a 7.5% interest rate. Now they're 6.5%, but home market went down in value. So again, it's only worth 425 versus 500 now. They could still do the refi. Do you see where the benefit lies there? Are you following, or is that confusing? There are certain factors here under refinance, under VA loans, where you can still refinance versus the other person who cannot. Now, I have a gentleman that wants to refinance really bad, but he had a really good interest rate. So it doesn't mean, you need to be able to save $100 a month. And we can't, because he tanked his credit afterwards. And we cannot get his interest rate down enough for enough savings. A negative. So Gold Star families, these are families whose spouses were killed in action. Think of the war going on right now. God bless, we've lost a bunch of soldiers. Those families for many, many years, their income has not been increased. They're way behind times. So the government is saying we've got to be able to fund different programs, military programs. They are now changing and this is proposed legislation. Chances are it's going to go through. They're going to increase the funding fee to 1.42%. Now, my understanding is if they're disabled still, they're protected. So, which is good. Whether it's 10% or 30% under this rule, I'm not sure, but you're going up really quite a bit for a funding fee if they don't have a disability. Assumptions. I had a best friend that just did an assumption. She's a realtor that was here, that she went back out to Vegas. And I was like, can you do it? I don't know. Well, she did it. She is a civilian and she did it. So you have different ways of doing assumptions. Let's say somebody had purchased a home in 2021 and had the 2 to 3% interest rate. By all means, you want to take advantage of it. Here's a great example here. $400,000 loan. They had a 2.75% rate. The monthly P&I is $1,633. Well, today's rate, 6.5%, would be $2,500. Now, you can get your client in a home that's sitting there on the market that is above where they would normally want to qualify as an assumption if it's a VA loan on that other one. Then you say, hey, sir, hey, ma'am, can we do a VA loan instead? You can save a lot of money. That's pretty awesome. So one of the big things is release the liability and entitlement. that house is tied to that veteran certificate of eligibility. Now, in my friend's case, that is a civilian. That certificate of eligibility for that gentleman, she's taken it from him. So he no longer has that purchasing power anymore. He can't buy another VA loan. The guy's up in his 80s. He's going to die. He's not buying another house. So he doesn't need to use his entitlement anymore, because you do have a certain amount of entitlement. So you can have 2 loans, but you only have so much entitlement. If your buyer is a veteran, though, they can then take it and use their own certificate of eligibility and then release that seller. So that seller can go and purchase another house. These are questions that a loan officer would need to talk to, or you can call me. They're going to be, I know, over your head a little bit, but just know that there is an option. And if you're in an area where there is not as limited housing and stuff, you can't get your buyer to find that right house and stuff, an assumption sometimes makes sense. They may need gap money between the two, but it's not going to be the full amount. It'll be a portion of that amount. Okay. It does take 45 to 90 days. Okay. And it goes according to the servicer that the other person has.
What do you mean a portion of the gap amount?
So let's say there is a gap of $10,000. I'm not sure if you have to pay the 10,000 or just because the certificate of eligibility doesn't cover that portion. I think you need 25% down on that.
Okay. So if it was, so I have some where it's, like a $40,000 gap, but I have some sellers right now where they don't need the entitlement released because they have enough to buy the house that they're going to buy in Texas. But if someone wanted to get it, it's a really low interest rate. It's a $40,000 gap, which for some veterans is going to be a lot, but for just a civilian who is going to do a conventional, it's not a big difference. So if it's a civilian, would they still have to, they're basically taking it over, would they have to do the 40,000? Is it only if they're switching entitlement?
You'd have to call the servicer and ask. Sometimes you can get loans through other companies that'll do that additional amount. I'm not sure which ones are there that will do it.
Yeah.
All right.
All right.
I know and I'm kicking myself for not having a pen on me. I know somebody said that they had somebody that was in Nashville or in Gatlinburg. And I'm like, man, I can't remember who said that they did, because I want that person.
Okay. Thank you.
Foreclosure. Don't let your veteran foreclose on a house. If they're starting to get in trouble, like I said, car accident, different things, they can actually do a loan modification. Any missed payments can actually, a 40-year loan modification. So maybe it's 40 years. Maybe for now, they're not paying much on the interest. But let's say they get their life back in order. They can make up that difference later on. It used to be where it was a lower interest rate. Now it's at market value. So they did change legislation. They pulled it back. We're doing the modifications. Then they said, okay, we're going to do it still, but we're doing it at the current rate, which is kind of fair. So if they had that 2.5% interest rate, now they're going to have that 6% interest rate, unfortunately. But they go all the way to 40 years. And it's longer than anybody else that does the modification. Okay. No new loan, no new appraisal, no new credit check. What they're going to want to do is see that VA direct line down at the bottom of the screen, that number. That's exactly what you're going to want to do. Okay. You're going to want to call them before the foreclosure. Now, as of June 2026, I think this is pretty awesome. Under HUD, have you ever heard of a forbearance? So they take their missed payments, they put it at the end of the loan. This would be the same thing. They're going to take their payments, put it at the end of the loan, but guess what? 0% interest. And no payments. No monthly payment on that second lien. Okay. So let's say they have that 2.5% interest rate. They don't want to give up that 2.5% interest rate, do they? They don't want to switch over to that current rate with 40 years. What they're going to want to do then is take those missed payments, put it at the end of the loan. This is a new one. Isn't this awesome? Up to 25 to 30% of the outstanding balance of the loan. Bam. Protect your vets. Be their hero. This is how you're the hero of the hero. Just kind of, I gave you the book in that chat. Okay.
Question.
Make sure yes.
Thank you. Yeah, this is great because I have one of my friends who's in this position right now, and she has called the VA and called the VA, hasn't gotten any help, and called the bank and has asked for forbearance, trying to fix things up, loss of employment, and then a change of position, which loss of hourly pay. So they came into some hardships. I don't know if she's facing foreclosure yet. So in her case, could she still call this direct line and get some type of help, or is it too late for her?
Where is she in the process? Have they started foreclosure? I'd call that 800 number and just ask.
Yeah. But so as long as they haven't started the foreclosure process, she may have this option. Is that what you're saying?
Yes.
Okay. If not her, then maybe another one, because this will help people from, it's going to hurt.
Kathy, if you can send out that VA book to everybody that I did,
we'll put
all
it
of
in
this is in
our
there.
chat with everybody. For some reason, I'm not able to. Okay, here we go. Goodness gracious. Here's your number. I don't know what I had accidentally hit, but I'm going to re-put the book back in the chat again for people who maybe came in a little later. So.
And with me with the slides up, I don't see the chat. I guess I can, but it pulls up as a separate screen. I know this is a lot of information, but this is why I've done 10 years of eat, sleeping, and breathing this. And this is just, it's amazing to be able to be the hero of these heroes and be that person that they can turn to when they have needs and questions, and agents as well.
When you're done, I'm going to let you put it back in there because
Okay.
it's not letting me copy it for some reason.
I'll put it right back in. Disability claims. One of the things I'm very strong at, I'll do that while I'm talking on that, is being the hero with disability claims. Give me 1 second. I'll put it right back in. I think I'll pop
There you go. It's back in there for everybody.
Oh, okay. I was going to say, I've got it right there. So be the hero. When I am meeting somebody for the first time, I actually sit them down. And one of the questions up front that I ask them is, have you ever filed for disability? And do you have a disability with the VA? And if they say no, I go into action. If they say yes, tell them, I'm so sorry that you do, but that's really good. And the reason being is your VA funding fee is now waived. Because if they have a 10% or more service connected disability, the VA funding fee is waived. How much is that for $300 and some $1,000? You're talking about $7,000. Okay. It's very, very simple. You don't do any work whatsoever as an agent. You have a 5-minute conversation with them, or less even, or put me on the phone and do a 3-way, give me their first name. I do the work for you. But all you do is encourage them. You can go to the VSO, Veteran Service Officer. That's the office in your county that services the veterans. They can go to the DAV, Disabled American Vets, or VFW. You guys all know the VFW. That's the most common that everyone knows. They can go any of those places and they can have someone for free file a claim form. First thing that you need to do is have them do this notice of intent to file. You go to vets.gov, vets.gov, and they go log into that. And all they do is go on there. It says disability, file a claim. And the notice of intent's right there. It takes them just a short time to do. If you can get them to do that, there are several things that can happen. Number one, if they get that 10% or more, then their VA funding fee that they are going to be charged at that closing, I don't know what your average price of your housing is, but can you imagine? I'm going to say 300 and some. I know our market's lower. A lot of markets are higher. You're talking about $7,000 check you're handing back to your client. Can you imagine if someone handed you $7,000? How would you feel? You'd feel really good, wouldn't you? Now imagine getting a $7,000 check back and getting a check for the rest of your life and a back payment check from the date that you filed that form. All three. Can you imagine getting that phone call saying, most of my house payment is now covered. I pretty much got a free house from you because I listened to you. Can you imagine? I had a gentleman that was in Atlanta, Georgia. He said, I had a bad experience with the VA. I don't want to deal with the VA. I said, listen, you had that experience down there. We're totally different. I get it. But you clearly qualify. And I asked him some basics, and he was deployed. He had a TBI, actually, traumatic brain injury. Anyone with a traumatic brain injury has a 10% or more service-connected disability. Come on, that's pretty obvious, right? Most of our vets who've served a few years actually have a 10% or more. And I encouraged them to go. Well, he called me up a few months later and said, I got 70%. It's not even including my TBI. Can you imagine that? That guy's going to be 100%. Be the hero of the hero. They sacrifice their lives for us. It's time for us to be their hero. Did I do any of the work? I didn't do any, but I had a 5-minute conversation. It took me less than 5 minutes to talk to you guys on that topic. Can you imagine a 70%, that gentleman right there, without the major TBI, which would have been an increase in probably to 100%, $1,800 a month. What would that do to him in that house payment? It'd be quite a bit, right? Do you know, I've gotten that phone call several times from clients who listen to me. Thank you so much. You changed my life. All right. I've got a guy in right now that I'm waiting to hear what he gets. And he should be here in a few weeks. He should have his answer. All right. But most everybody gets that 10% or more. So I tell my clients that call me afterwards because you need to contact the VA so that you can get that funding fee reimbursed, or contact your lender afterwards so that they can get it reimbursed. But they are due that funding fee because if it gets backdated, the key is, and that's at the bottom here, if the rating is effective before closing, which you have a year from the notice of file, from the notice of intent to file, you have a year to file from that date, and it gets backdated. If it's backdated and they do backdate it, then you get your refund. My lender boss, his son did not listen to him, and he never filed. He kicks himself every day being a loan processor, not doing that. As a lender, I tried to tell lenders to actually start this claim beforehand. But most lenders don't even understand this. It's very, very simple. If they have a 0% disability, have them file. My son is in the military right now. He's probably going to get out on the medical. If he gets out on the medical, he's guaranteed 30%. I told my daughter, tell him, because he's not much talking to mom. He's a boy, young boy. I told him he needs to talk to me before he gets out. When they go in, I do give them a little tip on the exam day. Describe your worst days. Don't say, hey, I'm doing okay. I'm doing good. That's one of the things when I was studying for Randy, it said, don't walk in there and say, hey, I'm doing great. How are you doing? When they start asking them how they're doing, you're going to say, hey, listen, I'm okay, but, I'm having issues, here or there. Describe your worst days. You don't want to sugarcoat anything. Men have a tendency to sugarcoat things because they're macho. They're not supposed to be broken. And, you need to. This did put in here what they can do if they're denied. They do have several appeal abilities. I would find a good lawyer if they have to appeal, or someone who knows what they're doing to appeal. Now, let's say they have 100% disability and they're 100% or permanent and total. A lot of our vets, believe it or not, are. Okay. It's not unheard of. A lot of mine are. There could be a state property tax exemption. And I kind of circled around our general area that the agents in our areas here. So it may not have Colorado, it may not have some things, but this kind of is Tennessee and West Virginia and surrounding areas. All of a sudden in my state now, 90% or higher rating. Now, if they pay their taxes on time, they can at tax return time file their DV1 form and get it back on their primary residence. Other states have different exemptions. Some of them are full, like Virginia. Virginia is 100% full. There is no cap either. Some have caps, some have income restrictions, some have different restrictions. But look at all those exemptions. They have to go to the county assessor and take their VA lender, the VA loan, a letter. It's on VetStock. Most veterans know how to get it, but they take their letter of disability into their local auditor office or appraiser. Okay. Isn't this awesome? Can you imagine as an agent knowing this, all of a sudden our veterans going to tell their buddies that, hey, this agent knows their stuff. That book that I gave you guys, it has all this in it. And like I said, I tried capturing the states kind of local for most agents. Do go on and research your area, research it periodically, because I did not know until last year that we did have that refund ability. I had no idea. And you can't do TurboTax either. They will not accept it in my state because we have to actually do the form. And with that form, it will not attach on those online ones. So just be cautious. Look it up. If you can actually, we don't have a base in my area. You don't have to have a base. My state has a lot of veterans in it. So that's where I specialize working with those vets. And that's where it's important for me to be able to help out with this, know the stuff. Because now they tell their buddies.
Yeah, and you was telling them, they were saying, well, if you can't get on at the right time, when you get on, you need to reschedule. Remember, I was here then?
I think so.
Well, I'm redoing.
Andrea, there you go. There you go. Okay, how can you help the veterans? Again, ask them about their VA compensation. Okay, file before they close. I had the one guy that got that $7,000 some back. He filed the night before, 11 o'clock at night, the night before closing. God bless America. And he laughs about it to today. He's like, but I got it back and stuff. The VSO, DAV, and VFW, all common acronyms that you can Google. All of that, you can send them over to there. It's free help for them. You send them over to do the work, not you. You don't have to do anything as an agent. All you have to know is that this is an option for them. Help them out. Because if you can get them, check for the rest of their life, the back pay, the VA funding fee refunded, all of a sudden you're their hero. So be the hero of the hero. Take 5 minutes to be that hero, that veteran, and learn about your state exemption. I have this in the book. So if you download that book, this is going to be in there. These are 3 lenders. Total Choice Mortgage, that is my boss. Brian Benton, he's a great communicator. He's in Florida. Awesome. He works 7 days a week like I do. He works nights and weekends. He is amazing. And then Veterans United Home Loans, Wesley Earl. He's pretty good as well. The clients tend to like him a lot. Key resources. Veterans United Realty has the book on VA loans there, down there. Join VUR at VU.com. So if you have done VA loans in the past year and you have an area and live near a veterans, a VA, a base, or you just have where you want to connect to veterans and you've done some loans, you can join Veterans United by doing join VUR at VU.com. Email them. Or you can go to Veterans United Realty and join through the agent network there. Okay, you just have to Google it, agent network. Okay, and sign up. there is a 35% on back end fee for them. They do both civilians and they do military now. So maybe you can't get in because they have a wait list for the Veterans United Veterans Network. But maybe you can get in initially under the Civilians Network. Don't hesitate to try and do that. Okay. And I do have a QR code I can give you for that. I do mainly Veterans United. And the reason being is that allows me to connect over to these veterans. If it wasn't for Veterans United, I wouldn't have the ability to do what I'm doing and helping the number of vets that I'm helping. I turn down multiple 2 or 3 clients for every client that I do accept. I've turned down probably 5 or 6 this week. I've accepted a couple, but I've turned down quite a number, and it may have been even more. But I don't care about that 35% fee on the back end. They're allowing me to be that hero. And I closed 20 loans with them last year. I've closed over 100 loans in my 10 years. I mean, literally over 100. That's pretty good. I am the top 1% now in their network. So I've learned to be a little more centric focused and everything versus when I was a younger agent. But I close between 40 and 50 homes a year, and about 20 of them are with them, or 20 some. I'm at 16 this year so far. So we're like, okay, what's our new goal this year? Because I'm going to hit that 20 and plus. And that was going to be my goal for this year was 20. I said, okay, we're going to see how far we can go. They do monitor you very closely. They monitor you on all metrics. How many you keep with them, how many you don't, how many you pull off to another lender. So I asked him yesterday, I said, I have a guy that's been turned down multiple times with you. Is it going to hurt me because I have him pre-approved through Mike Farrell? And she said, no, not at all. They've turned him down twice because he's not a 620. He's urgent for a house. And I've got to get him into the house. I have no choice but to pull him away from there. I don't recommend pulling him away because you can only take 20% and pull them away. That's what they look for your stats, because they will cut you. If they're feeding you all these clients, they want you to be loyal to them. I will say they have a 1% funding fee. Well, on the flip side, the interest rates that I close with them tend to be like a 0.25% lower. So even though their fee is just slightly higher, it's basically they're given in return a lower interest rate. I've closed a lot of them in the 5s this past year.
Wow.
So I'm not complaining. I don't complain at all. My clients don't complain. It's my smooth transactions. I give Mike the hard ones, the ones that can't do. I hate to say it. The poor guy. I don't give him my easy ones. Veterans United is really awesome. If you refer someone into Veterans United, then they give you a free appraisal, which has increased this year to like $750. And some places it's even higher. So it's $850 in the county below. There are areas of the country that's $1,250 because of remote locations and what they have to do. They are faster appraisals as well. They only have so many days to return the appraisal. They did extend that about 2 days this year, though. So I think Ohio is 10 days and West Virginia is 12. More things down here. You can actually request a hard copy of their VA loan book. It's going to be a lot thicker than mine. It is like super thick, where mine's more of something that's a quick go-to. It will teach you everything. The VA Lender's Handbook is a VA guide for lenders. It may not be as beneficial as my guide in the VA loan book, but it will tell you anything and everything. VA Claims Insider, that's a good website to give some ideas. I'm not saying use them because they are expensive, but it will actually pull up some of the disabilities. So for your clients. So let's say they had a back injury. Pain is 10% alone, but flexation is another thing. Okay, so you can have multiple things wrong with a joint or with an individual, and it could be multiple claims, not just one claim. The number again for foreclosure help. So these are good numbers. These are all in the book for you. And that's it.
Good
I'll stop
stuff. Good
sharing.
stuff. Wow, that's a lot of information. But really, really good stuff. I know we're past time, everybody, and
Sorry.
thanks for staying. Any quick last questions that you have?
Hey, Charlene, I have one. As far as the credit, how is that different from the VA 203 loan where you can just buy it and get it fixed up? Is that just a way of,
Because you're going to have additional, the VA renovation loan, you're going to have additional cost with the VA reno loan. And then you have to have a contractor oversee it. So you have to have these licensed contractors go and do it. That would be for bigger projects. The seller credits were like carpet. You don't want to have a contractor for carpet. You know, if you're just doing something simple, if it's like a room or something, and they can't afford it. Let's say you've got pee stains in that carpet in two of the rooms because they had dogs locked up in there or something. That's something simple that can be done on a credit card. You don't need to have a major contractor. You just, go to a carpet store, Lowe's or whatever, and do it. Something that you want to do yourself. Maybe you want to add a deck and all you need is the supplies and you're not wanting to pay for labor. So under the renovation loan, you're paying for that labor because the licensed contractor has to do it. Does that make sense? Good question. Any more questions?
Any more? Anybody?
I can come back and do this again if somebody wants. I know it's a lot of information.
It's a lot. It's a lot of great information, though. And I think having your book that you put in there for everybody is going to be super helpful for them to refer back to as well. So, thank you so much for coming today, Charlene. Thank you all for staying late and engaging. And yeah, we'll have this recording up here in probably 24, 48 hours. And we'll also attach the book with the recording. Would you like a copy of the recording, Charlene?
I would love it. I
Okay.
appreciate it greatly.
Sure thing. I will get that
If
over.
anybody has where you want me to go talk to a group of folks or anything, just let me know.
I just put her number in there for everybody. So just be sure to take that down if you want. And, reach out to her too for your loans. Like she clearly knows all her stuff and knows, where she can direct and help your client out. So,
I have two
and I
questions
love
for
your
every lender.
tagline, be a hero to the heroes. So I love your tagline on that.
Two
Yeah.
questions you can ask every lender to see whether or not they know VA. Number one, what is the benefit if they have a 10% or more surface connected disability? What is it? They get their funding fee waived. Number two is harder. Let's say they don't have that and they apply before closing and they get it afterwards. Then what is the benefit? That would be they can get it reimbursed. A lot of lenders can answer the first question. They can't answer the second question.
Kathy, where can this video recording be found?
Yep. So we'll have it on the Freedom Team Facebook page. And we will also have it on our Freedom Team YouTube channel. Okay. So if you search EXP Freedom Team, we've got all our trainings right there, current and past trainings to be able to access. We'll put a thumbnail and all with it. So it'll take us a day or say 24, 48 hours, and then we'll have it all up. And in the description, we'll have a copy of the book as well.
Thank you.
Charlene, really quick question on what you just said on the reimbursement. Is that at any point, if it's the same, so if they had gotten it and then they let's say they get out 10 years later and they have more than 10%?
No, you have to file prior to the closing.
Okay.
And then when they get their letter saying that they got their disability, it has a date on it. And if it's dated to that date before closing, that means at closing, they were disabled. They should never have paid for a funding fee.
Okay. And if it was rolled into the loan, is that just something where they're reimbursed?
Get it back. Okay. They'll actually get it back themselves. They can either put it on the loan or they'll write them a check.
Okay.
So to hand your clients a check, oh my goodness, what life changing is that? I mean, that could save someone's life.
Yeah.
It really can change it.
That's really
Appreciate it.
great
Thank
to
you.
know. Yeah.
You're
Good
welcome.
stuff. Thank you, thank you, thank you.
Yes, thank you,
Thanks a
Charlene.
lot.
Thank
I'll
you for
get
you and
you,
your husband's
I'll
service.
get you the recording out as soon as we get that all finalized. Okay.
All right. Thank you.
Thank you,
Thanks for having
Charlene.
me.
Thanks
God
so
bless
much.
everyone.
Appreciate you. Bye, everybody.